Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the high time frame with the first bullish scenario where we are looking for a 5-wave impulsive structure to the upside and then a bigger wave 1 followed by a move to the downside in 2 before then an impulsive structure to the upside to move towards 100k. In this scenario, wave 2 retraced to the 382 Fibonacci taken from the low to the high of wave 1. It is a less common target for a wave 2, bit more common for a wave B. The most common target for a wave 4 is between the 382 and the 05, taken from the low of 2 to the high of wave 3, with the invalidation being the 0.618 at 34.1k. Preferably, this wave 4 is finishing at least after the 0.382 Fib time, which is sitting on the 4th of March this year, with the Fib time taken from the end of 1 to the end of 2 and then put on the high of this wave 3 over here. After 4, we're looking for 5, and if I take a Fibonacci pull from the high of 3 to the lower end of the box here for this wave 4, then the most common target for wave 5 is between 51.9k and 56.5k. After this move, we then want to see a wave 2 to the downside. Because this wave 2 over here is so shallow, I would love to see this wave 2 being very, very deep. A little bit of rule of alternation between two wave 2s of a different degree. Now currently, if this wave 5 and therefore the end of wave 1 is going to end somewhere around the 56k area, then your target area for this wave 2 is going to be between 36k and 24.5k. Now this scenario works very, very well with the volume profiles of 2021. We have spent a lot of time in this range here previously, and my expectation is also based on Elliott Waves that we are going to spend a lot of time in this range during 2024. Of course, deviations are possible, however, I do expect price to then come back in once again, retest and just range trade between 50k and 30k pretty much. Something that is also interesting in confluence with these volume profiles is a Fibonacci taken from the high to the low. You can see the golden pocket here is in perfect confluence with the value area highs. That is what you like to see. We also hit the value area highs here and the golden pocket, so it is a nice solid rejection. If I switch the chart to logarithmic, then you can see that price has pretty much hit almost the 786 over here, and we are now back at the golden pocket, retesting this area of potential support, where of course we also have the point of control at 38.7k. Another bullish scenario is the 112, wave 1 finished, wave 2 finished of a higher degree, and then the second wave 1 is also finished, looking for the second wave 2. In this scenario, we are looking for a deeper retracement, as the common target for a wave 2 is between the 0.5 and the 0.786, taken from the low of 2 to the high that we have made. You can also see it if I put the other scenario on the chart. The common target for a wave 4 here is above the common target for a wave 2. The only confluence between the two is the 0.5 Fibonacci, which is sitting at 37k. In this case, the 786 here is sitting at 30k, and then we want to see a big impulse to the upside in a wave 3. Preferably, this wave 2 is ending after the 0.382 Fib time. Taken from the low of 2 to the high of 3, it is sitting on the 19th of February 2024. If we then look at the bearish scenario, we are looking at a 3-wave structure to the upside for a bigger macro bearish structure, where we are looking for an A, a B, and then eventually a wave C to the downside. Here, wave B hit the 382 as mentioned, common for a B, a little bit less common for a wave 2, and then we have this wave C here. Now, Fib time wise, the most common area for a wave C to end is between the 0.618 and the 1.618 Fib time, taken from the low to the high of A and put on the low of B to compare A with this wave C. And currently over here, the high has been made between the 0.618 and the 1 Fib time, very nice indeed. And then the price target over here is a trend-based Fib extension taken from the low to the high of A to the low of wave B, most common target can be seen on the chart. Wave Cs can extend, so if wave C is going to move above this high over here, or at least if price is going to move above this high one more time, it definitely doesn't invalidate a wave C, but we have to wait and see how long it takes, because if the range here is going to take too much time, the probabilities for a wave C, if price takes the high, are definitely diminishing. Now what is interesting is that price over here hit a monthly gap for the second time. If I go to the monthly chart here, then you can see the all-time high monthly candle. Then we had a bit of a drop to the downside, followed by another normal monthly candle. You can see we have a bit of a gap over here between this candle, and this is the monthly gap. It was touched once, and then we had a rejection to the downside. Very, very nice. That's what you like to see. However, price now came back and hit this gap for the second time, which does increase the probabilities to fill this gap towards the upside to 53.3k. On the weekly chart, we also have two gaps that can act as support. The first one here is from pretty much 40k to 38.5k, and the second one from 34k to 30k. If price hits a gap for the first time, the general expectation is that we will find some support, but the moment you come back and hit the gap again, probabilities increase to fill the gap. Same here to the downside, hitting 34k for the first time. One would expect a bit of a reaction and a bit of support, but if price comes back to this level, probabilities increase to fill the gap. Now, especially this one is very, very important for bullish market structure, because if I would extend this box, then you can see how important this area has been in general as a support resistance area. Support, 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 resistance, 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 potentially then acting as support once more. If I go to the daily chart, then you can see we are still inside this range. It has been an incredible range over here. Of course, we have the deviations. As explained, we can expect that on the weekly time frame as well, potentially, right? But nonetheless, this range has been quite incredible. Down, up, down, up, down, up, deviation. And now we are back at the lower end of the range, ranging on top of the value area low and the general support resistance area that we have here, which is sitting between 41.1k and 41.6k. The point of control is sitting at 42.6k, value area high at 44.2k, and the resistance box here is sitting at 44.8 to 44.4k. Also here on the daily chart, you can see we have a big gap, right? That is the daily gap, which I think is very, very interesting for price. We have this candle and this candle that create this gap after the big drop, and we have hit this daily gap for the second time. This was number one. This was candle number two. We didn't manage to close a candle inside the gap, but you can imagine if price is moving back to the upside and hits this gap for the third time, especially if we can take this high, probabilities increase to fill the gap to the upside and move towards 45.5k, where we also have some interesting resistance just above, which is between 45.9 and 46.7k. And if we then look at the probabilities of the different scenarios, then on the medium time frame we are looking for more downside. This looks like a wave A or 1, a B or 2, and then a C or 3 to the downside has the highest probability, but we don't yet know if we then get a wave C or a potential wave 3, which also means we don't really know on the higher time frame if this is an ABC structure and we go down all the way, or if we have a bullish structure in an ABC and then come back up to fill the monthly gap and take this high. So that is why on the high time frame the probabilities at the moment are neutral. We have the 382 touch here, which does increase probabilities for a wave B and a potential C, but at the same time we also have a second touch of the monthly gap, so it increases probabilities to fill that gap to the upside. So generally we want to observe the local price action over the upcoming days and weeks, as that will increase or decrease the probabilities for any of the high time frame scenarios. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.